Now, all right. Good afternoon. It is March 3rd. Let's get started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
All right. Thanks for watching. My name is Kenny Murden. I started doing these TikTok lives back in about October. So being newer to TikTok does not mean I'm newer to lending. I've been lending since 1999. In that time, I've been helping loan officers and real estate agents structure their more complicated deals. And that makes me well qualified to answer any questions that you might have about mortgages. But let's start with pricing, which is usually the first thing people have questions about. So I'm going to pull that up here. And as I always do, I start with an FHA purchase. So let's go purchase, $400,000 loan or purchase with a 3.5% down, a 680 credit score, which is just kind of middle of the road good. It's not like super good. And we'll say Texas, single family home. And we'll back that out, fees in, and we'll take a look and see what pricing looks like today. I saw rates were kind of flat as far as the bond goes here from yesterday to today, but the other day they jumped up quite a bit there. If you can see that little jump. But let's see here, modify this up to 5 1/8 is what we were talking about yesterday. So we'll see if rates improved or got worse. Looks like they got a little bit worse. So we'll modify that. Looks like we could do it at 0.8 points. So I'm raising the interest rate to lower cost. And that's where we're looking to be about a 0.5 point. And look, there's a different lender on top here today. It's always been that slow boat to China lender. They've been the price leader lately, and they've just been so slow in underwriting. I would just have to grit my teeth anytime I send them anything right now. But it looks like we have a few lenders that are all kind of grouped together on the pricing there for about a 0.5 point. So what is a point again? A point is 1% of the loan amount. So in this case, if we're charging a 0.5 point on a $400,000 deal, we're talking about $2,000 in lender cost to get a 5.25% interest rate. So now we're looking at that compared to yesterday, rates got a little worse. So what does that mean for us? So the advice that I get in my inbox is that they think these are going to trend higher. Obviously, they're looking at world news. They're looking at things like war in the Middle East and oil prices and the different economics. How does that boil down to interest rates is my only concern. I could give a darn about all of the geopolitical news. I hope everybody stays safe. I don't like to see people die, all of those things. But all I can control and all I focus on are the financial news. And so we're looking at interest rates got a little bit worse from yesterday to today. So if there's anything that you wanted to price out, let me see. I just got a note here. Thank you for the text message. Let me make sure I'm not sharing my screen as I check the text messages. Let's see what we got here. Wanted to compare pricing. Let me know. I'm in front of my computer and had the pricing engine up. Let's see here. Who is this guy? Jason. Oh, I see. Okay. All right. Now I know who that is. All right. So anyway, what I was saying is if you wanted to take a look at some loan pricing, I'm able to do that for you right here live on TikTok. Or if you prefer to get a written quote, then you can do so by taking a screenshot of this, and my phone number is listed above. Feel free to call or text. Obviously, I'm not going to answer a phone call while I do live, but go ahead and reach out and I'll get you the link to apply, and I'll be able to get you a written quote. I'll email you the documents that I need in order to move forward with a pre-approval. We can get you pre-approved in a day. It's a pretty quick and easy process. Technology is making things so nice. I'm able to find all you fine folks through social media and the interwebs. So I appreciate all of that. One topic that I wanted to talk about today is for you lovebirds out there that are thinking about tying the knot or maybe moving in together. Before you do that, before you consummate your relationship through marriage, one thing you could be talking about in the preparation, so if you're an engaged couple or your boyfriend, girlfriend, what have you, one thing that you could look at doing to maximize your FHA loan, I don't know, what would you call it, benefit, would be to both of you buy your own 4-unit building. You can buy up to 4-unit, multi-unit place. So with an FHA loan, you could buy a 1-unit, 2, 3, or a 4-unit place. So just go with me and say you both get a 4-plex, and you get it with 3.5% down payment, and you rent out the other 3 units, and you live in your buildings for a year. The next year, let's say you move in together, and so now you have all 8 units rented out, and you can use the cash flow of that to jumpstart your newly married life. You could take that cash flow to help finance the married home. It's just a little idea to house hack your way into, into married life. So that's an idea where I heard somebody say that you could do that. They were talking about single family homes. I'm like, wait a minute. You could do that with a 4-plex, and then then you could be up to 8 units rented out, have a whole bunch of cash flow to start your lives. One of the bigger hurdles that I run into when I'm looking at different loan applications is income, right? So that's like one of the biggest hurdles, that people just don't make enough money to afford homes. That's the affordability crisis. So one of the loan programs we've been talking about here recently is that equity sharing program, which it's available across the whole country, but it's not in every county. So we'd have to check what county the house is that you'd be looking to buy, make sure it qualifies. But that's where we'd be able to lower the interest rate 1.5 points permanently, right? For the life of your loan, a conventional loan, in the ballpark of 4.5% instead of the ballpark of 6%, give or take, if you're going to pay a point or not. But that's kind of one of the solutions to help that affordability of home ownership. And again, the reason why I love that loan program is because it makes it cheaper to own versus rent. Where right now in a lot of places, it's about a horse a piece. If you're going to rent a place for $2,000 or $3,000 a month in the area I'm in Texas, or if you buy a place with very little down, it's going to be about the same thing. And here in Texas, you have really high property taxes, insurance is ridiculous. So I was looking at, my friend has a free and clear house. How much does it cost to own a free and clear house? There's no loan on it. It's not like it's like a starter home, right? It's a 3-bedroom, 2-bath, 2-car garage in the next town next to me here in Texas. And I just kind of chuckled when I was looking at it's $1,500 a month to own a free and clear house. I'm like, So, I got the balding gray hair. So I'm old enough to remember what homes used to cost, when I was, buying my first house. I was like 19 when I bought my first house. But back then in the late 90s, early 2000, it was pretty common for people to rent an apartment for like $700 or, $1,000 if it was a nicer place. And now it costs, for just kind of a starter home, owned free and clear, $1,500 a month. It's just, I don't know, I got to chuckle out of that. So, and then in that same neighborhood, the houses that are for rent that are similar are about $2,000. So it's a difference of about a $500 a month savings to have your loan paid off in that neighborhood. So property taxes and insurance are a contending price, and that's where there's a little bit of a squeeze there. Anyway, so that's where I was like, if we're able to get a lower holding cost with that loan program, that's like an equity share program, I really enjoy that for the younger folks that are looking to get into home ownership. Because, at the end of the day, she still has the equity in that home. And if home prices skyrocket like they did, and I don't anticipate that they will, but if home values go up, she has a little bit more equity and a more manageable monthly cost. Like her rent isn't going to increase on her, right? The property taxes are likely going to go up. The homeowner's insurance is likely to go up just because inflation, and they always have, even though in the state of Texas, they're talking about reducing property taxes. They're talking about that in Florida as well. I like to see those things just because that's going to impact a lot of older folks, right? That they're getting priced out. You spent years and years paying off a mortgage only to find that your payment stays the same once it's paid off. It's ridiculous. It's just absolutely absurd. So that's why I like strategies like what I was talking about, where you both buy a 4-unit place, get renters in there to generate cash flow, and then after you live in them for a year, you can rent out the house, the unit that you'd be occupying for that year. And then you'd have all 8 units rented, and you can use that cash flow to go buy a bigger place or buy a modest place and have more cash flow for savings and for preparation for when the property taxes and insurance goes up later in life. And then you have 3 appreciating assets rather than just one. So that's another value add there. So I'm noticing, I don't know if there was a technical issue, so I'm going to restart this live here because I'm noticing a little tech issue here. So I will be right back. I know we're about 15 minutes in, but I'm not sure if this is going out. So I'm going to restart it and we will be right back.